Equity Management Academy live trading room, live streaming from TicketTacker. We're going to take a look at the gold market here, trading about up 36.80 at 714.80. Silver at 26.05. I wish it was 28. We got some fast market conditions this morning. GBTC is at 48.92, up 352. Most of the markets have turned around this morning quite aggressively to the upside, particularly the metals markets. GBTC, the E-mini S&P, we got some very, very strong markets here. Gold is trading last at 17.15.20, up 37.20 for the day. And if we take a look at the chart here, just to go right into the VCPMI indicators, it appears that the gold market has completed the target of the average price, testing the average price target of 1713. What we saw here was a low yesterday that was made at 1673, and not quite coming down to the weekly number of 1668 that we've had for pretty much this whole week. And looking at today's number, the buy one level is 1665. So the market reverted actually from the low of 1673 and completed the mean target here that you see of 1713 and completed the sell one level now that we're looking at about 1703. The sell two level daily is 1727. We ran up and met the weekly average price of 1713, which is where we're trading right now. So the program is neutral right now to bullish. It completed the first daily target of 1703 in the sell two level of 1727 is active for the day on a daily indicator. Trading above the weekly average of 1713 has activated the weekly sell one level of 1743. From the price action that we have seen here, with the market trading about 1713, it appears that the correction has been completed. The swing down correction has been completed. What you're looking at is the daily chart with the VC daily codes, the weekly codes, the monthly codes. And also what you're taking a look at is the formation, basically, that the trade has been pretty much trading between this descending channel until the market broke and closed below here around the 11th of February. The market traded pretty much on the upper band of resistance. Excuse me. So we have completed the pattern of the extreme below the mean. And I pointed out that the market coming down to this extreme below the mean has gone into an area that is considered a very high probability area of accumulation that you see here in these blue levels. And not only has the market come down to the highest probability levels that the AI of the VCPMI identifies, but the market has completed what it's called a golden ratio Fibonacci correction 161.8%. I'm sorry, 61.8% of the rally that we saw from 1450 to the recent high that we saw of 2089. And what you see here is that the AI prospective analysis of the algorithm telling us that we should expect buyers to come into this market at these levels here, as this indicates a very strong high probability area of accumulation of supply. Today is the confirmation. The market confirms the intelligence produced by the VCPMI. And this is a major reversal confirmation. This is what's considered a key reversal day. And it reverted right from the area of where the VCPMI tells us to be looking for buyers to come into the market. And this is the confirmation, basically, is that the green bar now is indicating that we're getting buyers to come into the market that are in strong hands, that are taking the supply that's being offered here, regardless of whether it's commercial paper or retail paper, it's supply. And this bar here indicates that there are stronger hands that are buying this market at these levels. Now, what the AI identifies when you're trading into this area here, particularly when we go through the test of the average daily, the weekly average, and the market reverts right back up above. This close here, using the 15-minute bar, is actually creating a bullish trend momentum on the daily, and it's completed now the weekly trend momentum. And you can see that the price has been trading or is trading between the two averages, the daily and the weekly. And it's been a neutral zone pretty much, telling you that, first of all, even though the price can come down, below the daily into the buy one level, into that 1665 or 1668 level, you don't want to go short down here. this is very important to understand in terms of what the colors represent. These are not just pivot points. These are proprietary pivot points that activate the probability factor besides the support and resistance that it provides for you. The fact that the lines, the color is blue, it's a high probability area where we can expect reversions to unfold. It's when you take a look at the buy one level, it is a 90% relative implied volatility to the mean, which is 50. The average price is a 50-50 standard deviation. So the buy one level is a 50-90 standard deviation, and it's a 1-to-1 factor. So you start getting into high probability math that tells you, it provides you a landscape where it tells you don't go short, because you only have a 10% probability if you go short. You want to wait until the market tests that level, and it validates it by reverting back above it, ideally above the daily and the weekly and the monthly and the annually and the cyclical, ideally. And that is what we look for, is not necessarily the price dictating the direction of the move, but as much as being a consequence of the prospective analysis that is done by the VCPMI. By the time the market reaches these levels, the pattern has been completed pretty much. The previous pattern has been completed. And then you go neutral. You allow for the neutrality of the market to give you a better objective perspective. So it tells you, when you're on the average, you don't have to trade. If you want to trade the highest probability trades mathematically, you want to wait until the price comes down to that B1 or B2. B2 is a 50-95% relative implied volatility to the mean with a 2-to-1 factor. And I personally, as a trader, I want to wait till ideally the market comes down to these levels below the mean, ideally the buy one level, ideally the price harmonically aligning itself like it is here between the daily and the weekly, and ideally for longer term traders with the monthly, the annual, and the cyclical. The application of the VCPMI takes away all guessing out of the market in terms of the energy, the momentum of the market. So breaking above the average price is very, very bullish. It activates the bullish trend momentum. Now, if you have futures positions, for example, and depending upon how many contracts you have, you can use these levels to lock in profits while you're managing your core position, which could be a long-term bullish core position, which is what I have, which is what I'm recommending my subscribers in my private trading room, is to build a core position so that when you're in and out of the short-term futures markets, when you're trading short-term, you can allow the core position to build serious equity for you in a market like today, in a move in gold, for example, where we see $600 moves or $300 moves. These are fantastic opportunities to lock in this price fractal. I call them profit fractals because it doesn't really matter where the market goes. Yes, the fundamentals have a significant impact in price, obviously, but it does not necessarily change the direction of the code of the VCPMI. Because by the time the price reaches these levels, it already has factored in whatever fundamental news may be out in the market. So I recommended yesterday, basically, as the market came down here, to get long. We went long on the future. We added some derivatives. And now that we have the confirmation and closing above this, 1713 is going to confirm that the market has unfolded a bullish price momentum once again. And so we're looking at the upper targets that match the weekly buy one level of 1781, and the sell two level is right above it, which is 1782. So we want to see the market reach these levels, and then we're going to see, what kind of volume, what kind of interest we see there. This is a target area for us now, which is into that 1800 level. We seem to be picking up some volatility here in gold and silver. We are holding on to some Bitcoin here as you see the market has entered an area of distribution of supply on the daily, but it's trading now above the 47.72 resistance. So that becomes the support with an objective of 51.99, which is the sell one level now. It's up quite a bit this morning, up about 7%. And so far, it looks like it wants to challenge the highs that we saw of 58 here made on February the 19th. That's a pretty bullish chart. Coming down right into the Fibonacci trend lines of support, confirming the area which we talk about as accumulation of supply, high probability accumulation of supply area. And the market validates by putting in this incredible reversal to the upside on Friday. We trade Bitcoin through GBTC as an active tradable asset that offers tremendous volatility. And for you traders that are looking for volatility, it's a fantastic instrument to trade, regardless of the economic or the political implications that it's stirring, so to speak, in the marketplace. It's a great tradable instrument. What we see here in silver as well is the market getting through that weekly average price of 25.77. And You can see the green bar has put in a major key reversal to the upside, and we're picking up momentum. This is what the market, when it gets to this level of the average price, identifies, is that the momentum may accelerate above this level here. Now, again, if you're a trader and you want to take aggressive risk, that is your choice, whether you want to trade above the average or not. Just know that when you're trading around the average, unless the momentum unfolds immediately, it's going to chop around there for a little bit. So it may chop you a bit before it goes. And just be aware of that. And if you're willing to take that risk, then that's fine. But just know, or at least the VCPMI as a guiding tool for you, as a GPS for your trading, is telling you, this is where it's a 50-50 standard deviation, and it could go either way. So we're going to be trading probably around the average price on the gold here of 1713, back and forth. I suggest my traders here, if you got a profit, if you bought it and hung to the swing from last night, you may want to hedge it covered with a, selling out of the money call, or taking a profit, just depending upon what profile you have. Things got a little bit quiet here, so I'm kind of looking around to see what's going on here. Things got a little bit quiet all over the place. The equity markets have gone into also the area of distribution of supply, the sell one level. The target of 38.72 is completed, and it's activated the second target of 39.17. It's up 63. And I think, if we want to include the fundamentals in here, it looks like this stimulus package that was approved is going to have a bullish impact in the equity markets, or across the markets in general. There seems to be a great deal of money in the system, and from what I'm hearing, a lot of money is going to go to people that really don't need the money, or are going to be making more money by staying home, so to speak. So it just doesn't make sense in some ways how we are going to recalibrate this whole economy once again. But one thing is for certain, that as we move into the economy once again and we normalize things as normal as they can be under the circumstances now, we're going to be dealing with, I believe, a shortage of supply, a shortage of services that are not going to be able to meet the potentially explosive demand that we're going to have by people going back to the economy. You know, the small businesses, particularly in the service industry, has been completely demolished. And it feels like what we're going to see is that the market is going to accelerate the inflationary aspect of price, not asset price, but basically price inflation that we haven't seen yet, as we have seen asset inflation move into equities and real estate and collectibles and so on. And I think this is the reality that we're going to be facing, is that we're going to be dealing with a shortage of supplies of goods, foods, and services. So the fear is that all this money that is at record savings, if you take a look at the savings statistics, the U.S. is at a record level of savings. There's a lot of money in the system. Just take a look at the balance sheet of the Feds. And two, so I think, it's natural that as things normalize, people are going to go back with a vengeance into the economy. Travel, leisure, hospitality. And I think this is just the beginning of what I think the economy is going to need. We don't see yet the other side of the coin, so to speak, in that all of this stimulus should bring is economic recovery. We don't even know what's going to be on the other side when we come out of this, so to speak. So there's a lot of uncertainty, and initially, obviously, this uncertainty has put in what we are seeing is a rise in interest rates temporarily, and the 10-year note that we're tracking here has gone up to 160. I want to bring up the chart here. This is the 10-year chart, and you can see that the yields pretty much got up to above 160 just a few days ago. 160, 161, and that is what caused a lot of nervousness in the market. And I think what the 10-year note is pretty much confirming is the fact that we are going to see some kind of level of inflation. Now, the Feds have targeted inflation at just around 2%, not including foods and energy, which is, I believe, an anomaly, because those two are the most important, factors in the economy, in identifying the weakness of the strength of the economy. And so this rally that we have seen in in interest rate short term has created a short-term safe haven demand for U.S. Treasuries, which is the second country that is offering so far yet still positive yield on the 10-year note outside of Australia. But I don't believe this is going to be of a longer term effect that we're seeing as much, because we cannot afford, the U.S. cannot afford for interest rates to go up. It just cannot afford in the face of what we're getting to is about a $30 trillion debt. Doesn't take a rocket science to figure out what 1% increase would do to the expense of that debt, not to mention the economy. So this is the focus that we've seen in the market for the last week or so, but I believe that rates inevitably are going to have to come down once again. The path of least resistance is for rates to go down and potentially even go negative if we don't see any kind of economic recovery. Excuse me. Coming back to the market here, looking at the gold chart on the left, you can see that the gold market is trading around the average, and it's reacting the way that we expect the market to react when it trades around that average, and that's essentially very choppy. The silver market is trading above the average and also has completed again the sell 1 level. So here, the market, for example, right now trading below the average of 1713 has negated this bullish prior trend. And now it's, telling us, alerting us that if we close below 1713, using the 15-minute bar, it's going to activate a neutral to bearish trend momentum, which is the opposite of what we saw before. So here's where the choppiness come in. And, it's a question of basically the market momentum materializing and realizing the objective. It's either going to move up to 1727, or if it closes below, it's going to activate the extreme level below that mean, which is once again the 1668 level. It's coming back up above, so expect to be a little choppy here for the remainder of the day. Let me bring back here the TradeStation platform, and let's take a look and see some of the other markets here, what they're doing here. The copper market is developing to be a potentially tremendously explosive market as we go back into the economy. So we've been paying attention to copper as well and looking for buying opportunities, and it looks like the market is coming down into some high probability levels that you may want to trade on the long side. The mini has completed the sell 1 level, but it can still go up to the sell to level that is the 39.17 area. So this is identifying the E-mini S&Ps in an area of distribution of supply. Nugget, which is a bullish ETF, it's a double ETN, a 2-to-1 velocity, is what we use to trade the long side if we want to get aggressive. And what you see here is the derivatives, they have jumped in a gap, you might say, from this move that we saw last night. So the possibility of a little bit of profit taken here obviously is coming in as the market is extremely overbought short term. And it's a huge gap from the level below from last night. These are instruments that you want to trade short term. They're aggressive instruments, but they're great to manage risk. SILJ, for example, is another ETF that we trade, which is in the silver market, and it follows the velocity of the silver market. So as you can see, if you want to take a look at all these algorithms that we produce, you're welcome to go to imatotrade.com, where we provide more than 80 algorithms. Although we don't trade them all, we provide the signals, and what we trade basically are about 3 or 4 markets, which are gold, silver, the E-mini S&P, and Bitcoin. Let me take a look at some of the things here that I need to do here for a second. Market's quieting down here, so it gives me a chance to coach you and teach you pretty much how to use this trading tool. A little bit of profit taken at the average, and the silver seems to be holding obviously above that weekly average, the daily target, and it's trading between the trading range of 25.77 and 26.38, which is the distribution of supply area that is identified daily. So we're comfortable that we took out some profits here this morning on the futures. And just lock in some profits. You got a nice move and wait for the market to activate another short-term high probability signal. A lot of profit taken, obviously, as I mentioned, and Nugget for the time being. The market, moved up sharply higher here overnight to 56.06, which was a pretty big move, huge gap. So it is, consolidating a little bit and filling the gap, which is normal, especially with this kind of volatility. You want to continue to just hold your long position, be patient. I think the market confirmed that the bottom is in there, so it's just a question of, I think, as we move into the rest of this week, the rest of the month, where we are going to see a lot more volatility. And I think the path, again, of least resistance is going to be to the upside. Closing about 1713 confirms the bottom is in. Closing about 2577 on silver confirms that the bottom is in. So we'll see. We'll see what the closes are, but we're certainly moving in the right direction. I think the metals got pretty much away from the fundamentals that have been pretty bullish here all over the place on the internet, particularly Wall Street, silver, making such a major campaign to take the other side of this short position, so to speak, that's been prevalent in the silver market for the last few years by commercial bankers. And I think they have looked at the some of the practices that truly are borderline, I think, illegal. When we take a look at the deliveries last delivery date, the March, there were 5,000 contracts outstanding to take delivery. And the day before, 50,000 contracts were sold. Doesn't make any sense. Why would somebody sell 50,000 contracts the day before delivery unless they want to control the price? That's a 10-to-1 more silver than it actually exists. And that seems to be legal, according to the CFTC. But if you or I were to do that, we would be put in prison in no time for market manipulation. It doesn't seems to be a double standard with regards to those regulations. So I think the markets are adjusting. And I think the market pretty much cleaned out a lot of the short pressure that it had. Commercials liquidated about 22, I believe, $billion, or almost 50% of their short positions. They are still carrying quite a bit, but have reduced the position substantially. And I think we will know by Friday here what this week's numbers were, whether they liquidated more of the short positions or they added to the short positions. And I think that's the other side of the trade, pretty much, that the Reddit crowd or Wall Street Silver is looking to trade against, which is hegemony. It's hedge funds. It's big money. And you saw what happened here recently. You know, they caught them by surprise, brought the market up to 30, and, you know, went down to a 24.84. It's about a $5 move in a matter of weeks. A lot of those guys that bought up there just got wiped out. So you want to be careful that you don't follow the herd, so to speak, because you're going to get slaughtered if you do. Things are very quiet here. Very, very quiet. I want to play this video just to review basically the VCPMI automated trading system for those that are joining us.
Are you looking for an automated artificial intelligence trading system? Do you want to analyze commodities and financial markets to determine when to buy and sell? Looking for an indicator to predict future trends in the commodities and financial markets? Welcome to EMA2 Trade Live Signals. Our variable changing price momentum indicator, VCPMI, is an automated AI trading system developed and tested over a decade. The VCPMI algorithm is based on age-old vortex mathematics, combined with Fibonacci wave theory, trend analysis, pivot points, and several other widely accepted financial analytical methods. The VCPMI can help you take emotions out of your trading and rely on simple mathematics to predict future trends in financial markets. This approach will make your trading more effective, consistent, and profitable. VCPMI algorithm. The VCPMI code points and levels are support and resistance levels and behave exactly like any historical supply and demand level. Therefore, the VCPMI code levels are useful as an index tool for both day trading and for selecting and exercising entries and exits for longer-term traders. Why VCPMI? The VCPMI relies on artificial intelligence to analyze markets and predicts future movements, which seek to determine what a security or commodity is worth at a given point in time. The VCPMI uses technical analysis in the form of mean reversion trading, which seeks to capitalize on extreme changes in the pricing of a particular market based on the assumption that it will revert to its previous state. The VCPMI can be applied to both buying and selling, as it allows a trader to profit on unexpected upswings and save when security or commodity is trading at an abnormal level. Visit ema2trade.com for more details.
I thought I'd share that with you because it doesn't hurt to review basically the process of using the VCPMI, which stands for the Variable Changing Price Momentum Indicator. Prices have slowed down quite a bit here, so let's just enjoy watching the market here for the time being. And if something does come up, I will update you here. If you have any questions at all, please feel free to reach out to us, reach out to Ticket Talker. We'll be more than glad to answer any questions or concerns that you may have. For those that are interested in getting our book, Mean Reversion Trading, please let us know. We'll be more than glad to send you. We've just updated it, and we'll be glad to send it to you. If you're interested in some of the work that I do here, please follow what I do. You can go to the Equity Management Academy and request a free book and have a chance to see pretty much what we do. When you become a subscriber, we give you access to basically the exclusive membership, which includes all the data, includes all the algorithms that we run in the room here. We also have access to the live trading room, which is a private trading room. We publish reports in Seeking Alpha, the Associated Press. You can click on any of these reports and get caught up with basically how we are applying the VCPMI. You can also take a look at the weekly podcast that we publish every week. And we go into detail in terms of how we are applying this incredible intelligence. And you can feel free to go to my trading room, my YouTube account, and pretty much see everything that I've done, that we have done here for the past couple of years. We have documented about, I think it's over 260 hours of live trading over the last couple of years. And so you have a lot of material here that you want to take a look at if you so inclined to do so. But we do provide a great deal of transparency to our members, to our traders, to our subscribers. And I think it's valuable intelligence that you can use during this historic times that we are dealing with right now. So just to reiterate here, the metals, gold and silver, have completed the target of 1713, which is the average price for the week. And so There are no trades for day trading. The weekly signal is neutral, and this is where you may want to use the equity appreciation here for you to manage your portfolio intelligently. Take advantage of this move, take advantage of these profits, as we have been recommending to our traders in our private trading room. The silver market met the target, 25.77, met the daily target of 25.77 and the weekly average of 25.77, and it's activating 26.38. If you're carrying a position, you can trail it with a stop, or you can synthesize your position by selling it out of the money call. But do continue to hold on your bullish bias, as I think we are looking at an incredible market here as we move into the next couple of weeks in the month of April. Be patient, continue to hold your longs, and I look forward to seeing you the next time. This is Patrick MontesDeOca. Have a great, great trading day. Talk to you soon.
The risk of loss in trading commodity interests can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition, and considering whether to trade or to authorize someone else to trade for you. Past performance is not necessarily indicative of future results.
Steve Collegian here with John Najarian, folks. We're at Master Control here at